Hello, and welcome to Donut Investment. This analysis is for SoFi Technologies on NASDAQ as of 16th of August 2026 with a share price of $18.29. The full report is on donutsion.ca. Re-anchored on the framework's bank test, price to tangible book of 2.49x against a warranted 1.10x, valuation falls from 66 to 32 and the valuation ceiling gate triggers. Start with what went right, because most of it did. Net revenue compounded at 42.6% year-on-year. Loan originations rose 69%. Members grew 35% to 15.8 million, and deposits rose $5.3 billion in the quarter to $45.5 billion, funding more than 90% of the balance sheet. The credit read improved too. Charge-offs across the whole book fell to 1.81% from 2.12%. Common Equity Tier 1 capital sits at 18.7% against a 10% strong line. 6 consecutive quarters of rising operating income. None of that is the problem. Now the correction. The last report anchored this name on a compounder forward price-to-earnings line of 26 times, scored a forward multiple against it, and read the valuation as attractive. That 26 times line is not either of the framework's financials guardrails. The prior calibration carried no sector field at all, so the guardrail check could not run, and the framework specifies the clean trailing multiple rather than the forward one. Re-anchored on the mandated bank test, justified price to tangible book, because 65% of net revenue is net interest income, and this is a chartered deposit taker. It reads 2.49 times actual against 1.10 times warranted. Valuation falls from 66 to 32. That single pillar is the whole downgrade. The obvious objection is that a warranted multiple is a judgment, so the downgrade rests on our assumptions. On this name, it does not. The framework's deposit-taking guardrail puts a 16 times price-to-earnings floor under the expensive band, and that floor is breached 3 separate ways with no estimate of any kind. The clean trailing multiple at 44.1, the reported multiple at 38.9, and even the forward 2027 multiple at 22.2. To escape expensive on the book value route, this business would need a normalized return on tangible equity of 17.6%. It currently earns 6.8 against a cost of equity of 11.2. On a sell, the balance is the upside case, and it is real. Timing genuinely improved 8 points. Swing lows have stepped up from 14.88 at the end of July through 15.65, 16.47, 16.72, and 17.08. Price is back above the 20 and 50-day averages, and the technical entry path is open. The bull case at $24 carries 20%. The energy shock subsides, the Fed resumes cutting, deposit costs fall, the fair value mark recovers, and guidance rises. The analyst consensus sits at 21.11, 15% above the price. And business quality is 1 single point below the high band, where this same valuation would read hold rather than sell. Note what that does not change. Neither row produces a buy, so the pick stops either way. Now weigh the risk against the reward. The bull case is roughly 31% above today, the base case the most likely, about 2%, and the bear case a fall of about 29%, so you are risking about 29 to make 31. So, our call on SoFi Technologies, on NASDAQ, sell on all 3 horizons. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Donut Investment at donutsion.ca. The link to the full report is in the notes below. Have a great day.